During the second quarter, U.S. and international equity markets responded negatively to the news du jour out of Europe, China, and the U.S. The S&P 500 dropped 3.5% during the second quarter. The Dow Jones Industrial Average dropped 2.5%, and the NASDAQ gave back 5%. International equity markets did not fare much better. The broad international equity market dropped 6% in the second quarter, while emerging market equities dropped over 7%. In an uncertain environment, it isn't surprising that Treasury bonds outperformed riskier segments of the bond market. Long-term Treasuries were up over 12%. 7 to 10-year Treasuries were up 5%, while investment-grade corporate bonds and high-yield bonds were up approximately 3% and 2% respectively. Gold was not a safe haven during the second quarter, dropping over 4%. And silver, which has been in a bear market since its September 8, 2011 high, dropped almost 15% during the quarter. Copper, aluminum, and steel, which are usually good indicators of the market's expectations for economic growth, also dropped during the quarter. So what created the downdraft in global and domestic equity markets in the second quarter? It is remarkable that the same issues that influenced the markets a year ago are still impacting worldwide markets, although with not quite as much force. The biggest driver of the financial markets continues to be uncertainty about the outcome of the Eurozone's debt, currency, banking, and economic woes. The ability of several European governments, most notably Spain, to repay their government debt is a major concern due to its impact on the national, Eurozone, and ultimately the global economy. Two particularly positive pieces of news caused the markets to rally during the second quarter. The Greek elections resulted in a coalition that wants to stay in the European Union. And on June 29th, Eurozone leaders, in their 20th meeting on the issue, decided to loan bailout funds directly to struggling banks rather than increase government debt. They also decided to infuse a 120 billion euro stimulation package into the weakening European economies. The domestic and international stock market rallies caused by this positive news was short-lived, however, because the markets recognized that these events are just the beginning of solving the Eurozone's problems. There are many tough issues still to be faced, not the least of which is how to implement austerity measures in a deepening European recession. And many tough and unpopular decisions will have to be made and implemented before the Eurozone is on the road to significant fiscal and economic recovery. In addition to problems in Europe, concerns about slowing Chinese and Indian economies have impacted stock and bond market volatility on almost a daily basis. And a final driving force in the financial markets is, as it was a year ago, the weak U.S. economic recovery. Employment, manufacturing, and consumer spending numbers continue to be weak. On a positive note, falling gas prices should add about $100 billion in the pockets of American consumers. And the housing market appears to have finally bottomed. Pending home sales in May, for example, increased by 5.9% from the previous month, and new home sales increased by almost 8%. This is a good start and an important one. We will not see a strong recovery in the U.S. economy without a significant recovery in the U.S. housing market. All of this points to a continued uncertain environment for investors. In such an environment, it pays to have a mix of investments that do well when the U.S. stock markets go up and investments that do well when the U.S. stock markets go down. It also pays to have a significant weighting in cash, because the day will come when there will be great investments at discount prices. Until that time, patience will be rewarded. We won't be in this global economic conundrum forever. If you have questions about LifePlan's investment strategy during these uncertain times, please feel free to contact your relationship manager. And as always, we appreciate the opportunity to serve you as a valued client of LifePlan Financial Group.